Hey guys, how is it going today? So today is now November 6th, so good morning or good evening to everybody, depending on where you are in the world. I hope you guys had a very good weekend. Now, I wanted to take a look at some OMG Go, guys. I can't be singing any more Lady Gaga songs to the OMG Go or even saying, Backstreet Boys or anything like that, and I can't sing to their song because I keep getting all these copyright infringements. So these copyright infringements are gonna prevent me from singing you guys a really nice song today. Okay, so let's take a look at where we left off last time. Okay, so I'm just gonna play my video here for you guys. And I just want to show you, this is my YouTube video from when I last created the video. And when I last created the video, I drew this A, B, C wave right in here, which formed the B wave. And then I started drawing the 1, 2, 3, 4, 5 to make it look like a round top like this to come down to $5.60 again, okay? So that was my original target, and if it got a double bottom, I was actually going to go into a long position over here. Now, let's just catch you guys up with where we are right now. And if I actually go on, say, the 45-minute chart or something like that, that's kind of how it's looking right now, okay? So this is the video where before it formed, okay, where we're just kind of rounding like that, okay. This was actually filmed 48 hours ago. Yeah, recorded 48 hours ago just to kind of make a double bottom here on its way down. And now take a look at where we actually are at. So it's kind of scary how close this is looking already, right? So yeah, so I'm just gonna catch everybody up for all the new viewers. So the way I was analyzing it this time around was like this, okay guys? I made first of all, this is the wave 1, 2, 3, 4, and 5 going up here, right? And with every single A, B, C correction, so, oh, this is not W, this is W. We have an A, B, C coming down here, right? And then after we get an A, B, C correction there, we get a W at the bottom if it does not break out, right? So if this is wave 1 right here, okay? Every time well, actually, this is all of wave 1 up to over here. My bad. This one doesn't really count because that's where it was added to a Poloniex exchange. And when it would add it to the Poloniex exchange, it spiked up one more time, of course, right? And then after it finished wave 1 up here, we'll call this wave 1, okay? It does an A, B, C correction always, right? And I'm just gonna show you guys like from a handbook here what I'm referring to. Just based on some Elliot Wave principles, okay? So it does a 1, 2, so let's say we finish wave 1, that's where we're at right now, okay? And then it does a 1, 2, 3, 4, 5, and then it basically does an A, B, and a C right here, right? Now the C was actually made already, but every time it doesn't finish that C wave, it ends up making this type of correction instead, and I'll show you guys. This is from an Elliot Wave book. You guys can give it a read if you want. It's a few hundred pages. I've gone over it a few times already, maybe 6, 7 times now, and actually way more than that. Who am I kidding? And it gives you a really good idea of how corrections can be made. Sorry, don't mind me while I'm just chatting and looking for it here. Come on. There we go. So it tries to make an A, B, and a C correction, right? But the C ended up right over here for OmiseGo. And every time it makes a C correction, it attempts to break out into wave 2, right? But if it only hits, for example, a point X, where we call it, and it meets a major resistance, it goes down to point Y, and then it tries to make an A, B, C correction again. Now, I've taken it even further, and they don't even explain in this book till way later, which I won't get into. But every time it does a Y correction over here, right, for another A, B, C, actually I'll back up a little bit. So it does the A, B, C correction, it tries to shoot up to wave 2 to begin, but because it failed and it only ended up right there, right, what ends up happening is we call this the start of W, and we call this the start of X as well. And then from the X position, it tries to make an A, B, C correction, just like this. But because it makes an ABC correction, and then it tries to shoot up again, right, after it finishes that ABC correction like that. But what we can actually see is a major resistance right here, okay? We see a major resistance, and unfortunately, it doesn't hit it. So what ends up happening is it becomes another X position. And because it becomes another X position, that's how I was able to predict this kind of double bottom right here, okay? I tried to predict that. So just, you know what, let's take a look at ETP really quickly, all right? We're gonna compare it to ETP, right? So ABC, if you guys notice here on ETP, it makes the A, B, C right here, okay? And then it tries to shoot up into the start of wave 2, right? This is wave 1. This would have been wave 2 finishing. Or sorry, I keep saying 2, but I mean 3. It tries to shoot up into wave 3, but it fails, okay? And because it fails there, we call that location X, right? We call that location X, and then we make an A, B, C correction again, which ends up being Y down here. And then it tries to shoot up right here. It tries to shoot up, but it fails, right? So because of that, we call it another point X. And then now, from X to Z at the bottom, which ends W, X, Y, Z correction, okay? It does, see, this one actually hit my target pretty much right there. And then I just drew it a little bit slightly off here, but it ends up like that. And this one was predicted about 72 hours ago, and it hit it. And now we can see a breakout, right? As I predicted it. And from X to Z, we have an A, B, and a C correction, right? And notice, if you guys notice here, point A tried to break the resistance, but it couldn't. Point C tried to break the resistance, but it couldn't, right? So it makes another 1, 2, 3, 4, and 5, okay? Now, if you compare it to OmiseGo, I don't see anything different. The similarity is insane, right? And we call these equivalent to a similarity index in cryptocurrency, right? So the similarity index is extremely high, and we can find a lot of these types of patterns within patterns. So it might actually not even make it to over here. That one might have been extended, but we're gonna redraw actually I'll keep it on there for now, and then we'll start redrawing it soon. So this is point X, where wave 3 started to break out, but because it couldn't do that, right, it made a 1, 2, 3, 4, and 5 here, just a slight double bottom right here. In fact, yeah, so this ends up being A right here. And if you guys notice on A, it tries to shoot up to the resistance line as well, fails, does the B correction, tries to shoot up to the resistance line again, and then it fails, right? And because this A, B, C correction right here is formed now, what we can assume is if that's A, if that's B, then there's going to be one more small wave down right over here. And how small it is, we're going to figure that out right now together, guys. So have you guys noticed how similar every single coin is so far? I mean, if we look at, for example, NEO as well, which I'll get into another day, and you know, ETP especially, it's incredibly similar what it's doing. That's why these are actually really easy to trade, in my opinion. We find a lot of similarities in other charts, and we use it as a reference. We use it as a reference to compare it to other charts to see how far or how behind they are. So this is 1 clearly, that's 2, this is basically 3 right here, right? And you know, this could be B right here, right? This might not even be the double bottom actually, so I'm kind of debating it right now. It was a little bit small for it to get a 5th one, but I do think that it is. But let's look at some other actually, yeah, that's definitely ABC up there, okay? I just drew that really wrong right there. Okay. 1, 2, 3. So let's say that I didn't draw that, or I did draw it wrong actually, and instead of this one becoming 5, because we want to keep things very similar in terms of strength, let's say that this was an ABC, right? And we just want to keep it a very similar proportionality, okay? So let's say that this is actually 0.5, where it's still making its way down, or even this could be 5 right here, where it could get a slightly truncated bottom here. So what I'm predicting is, let's just look at a few scenarios. If this was 1, right, and this is 2, and this is 3 coming down here, yeah, that looks all right to me. Yeah, okay, that makes a lot of sense. Okay, 4 and then 5. Let's just say it was something like that right now, okay? And then let's say that this is the ABC correction that it's about to form. So let's say we have A, and let's say we have B right here, and then we have a C that could form up to there. Actually, the C would be a lot bigger than that. It'd most likely be something like this, okay? If we follow that it would be very similar to ETP, let's just assume that this is ABC correction up there, okay? Then it's gonna make probably a small correction as well to the downside to something like this, because I definitely think it's gonna test it again. So we haven't officially made a test yet, and if you guys look at all these resistance points right here, okay, this is a pretty strong resistance point right now. So let's say I circle this for you guys, right? You can see this as one clear resistance and a second clear resistance right there, right? And the next type of resistance that we see is probably around this green box that I highlighted before, okay? But usually what definitely happens here, it goes 1, 2, 3, 4, and then this could be 5 down here, okay? If that was 5 down there, we could expect something like this, for example, ABC, because this definitely looks like it's coming down to about this point, right, to make another bottom here. And then it will make an attempt for a correction A, B, C, and then if it fails, it'll just end up coming back all the way down to over here. And that's why I have my risk to reward ratio here of 4.46. I'm expecting it to get a double bottom. It's got to make another test to a bottom to see if it can get pushed over, okay? So because we don't have a clear resistance line right here yet, well, usually there's always a fight between the bulls and the bears, right? For example, if we look at here, okay, a resistance ended up forming because it wanted to test that resistance point while breaking out of it. But here we don't exactly have a test quite yet. Let's calculate some targets, okay? Let's, for example, based on up here to here and here, what we do is take a tool called trend-based Fibonacci extension. And then what trend-based Fibonacci extension does is it takes one point, and then a second point, and then a third point, okay? So let's say, just as an example, I had something like this, okay? I had something like that, and we want to test how far it goes down. The ratio that we want to use is a fib extension ratio 1 to 1. 1 to 1. And I'll show you guys what this means. So you take your trend-based Fibonacci extension here, you click on this point, you click on the bottom point, okay? And then you get a line to where this one ended, then you click here again. And notice right here, it says 1. And when it says 1 there, what that means is this distance right here is equal to 1, for example, okay? Okay, that moved $1.82, and now the distance from the top to where this started is also equal to a 1 to 1 ratio coming down once it reaches it. Does that make sense? So I'll go over that one more time. We call this a 1 to 1 ratio, right? So for example, if this was equal to 1, well, what would 50% be, guys? 50% would be right here, okay, where the 0.5 line is. So here would be 61.8%, here would be 78.6%, and here would be 1 to 1, right? So you're getting a 1 to 1 ratio. Now let's take our Fibonacci extensions. If that doesn't make sense too much, just rewind and watch it a few times, and I think that it will make sense. So let's take our Fibonacci trend-based extension. If you guys don't see it here, click on that little context menu, come down to trend-based fib extension, and we will use this one coming down as a gauge, okay? So let's see how far this one right here came down. And surely enough, we see just about a 1 to 1 extension right here, okay? Isn't that crazy, guys? A 1 to 1 extension that this one basically hit. So we know that this 1 to 1 extension is holding fairly strong. Now let's see if we take this highest point and this point right here, how far it could possibly come down. So that point, say this point, and even this point. So on a 1 to 1 extension, we could be hitting 1 point. We can even be hitting $4.27 if this is the fifth wave here and it ends up going down more. But the thing I'm worried about right now is that this right here was 0.3, this is 0.4, and I'm worried that this right here is 0.5, okay? That's what's worrying me a little bit right now. And then what could be worrying me is, what if this was A and that was B right here, okay? B, and that was C already right here? And what if the very final one is actually just really small? Like for example, 1, 2, right? 3, for example, we'll say this is about 4. And then we get a small fifth one right there, which is possible as well. Now we can confirm it with a lot of things. So we're going to look at on the daily chart first, okay? Now for the people that are playing on the daily charts, it's of course easier to see as well what kind of momentum we're having. So if you guys notice on a downtrend right here, on a downtrend, right, it's starting to curve a little bit, right? It's starting to curve right here. And on a downtrend, if you get a candle like a doji candle, what that strongly means is well, we're only a few hours into the day. We're only like 9 hours into the day, so this is still forming. But because it's such a little candle that's forming, it will usually imply that there's indecision to go down. If you see a doji on an uptrend, it means there's hesitation to go up. And if you see a doji on a downtrend, it means there's hesitation to go down, okay? This candle is a beautiful candle right here, actually. Notice how it's coming down, and then we got a nice green candle with a really long wick right there. What that long wick implies is there's more indecision to go down now. So if we see a candle like this on a daily chart, it's actually really good. So for example, on this candle right here, right, it's going down, then this daily candle formed. And after it formed, it actually shot up to like $8.64 there, because it's market psychology where it explains that the market tried to push it down lower, but then the bulls successfully defended and pushed it back up. They're creating a lot of indecision in the market, but the bears lose because of that market psychology. Now, if we actually look on the daily chart, we can see it going up right now, right? So we're gonna have to redraw a lot of this differently, in my opinion. Let's just delete some of this stuff. But first, before we do that, let's take a look at the daily chart. The daily chart says that we have bottomed out somewhere already here, and we're getting momentum to go up, right? If we look on the MACD, it looks like it eventually wants to do this in the next few days, doesn't it? Right? It just looks like it wants to do that. What we see here is on the daily is that it's slowly getting higher. Slowly getting higher. Now we can look at it on other time frames as well, and we can also see that here was a pretty crazy bottom that it reached on a 4-hour chart. That's when Bitcoin was rallying. We can kind of see it bottoming out right here with a slightly higher high, right? So that's actually a good sign as well. Here it looks like it's going to come down up just a tiny bit and then curve upwards. If we go to the 3-hour chart, right, we're definitely seeing it level off. But what worries me is we're getting a lower low, right? We're getting a lower low here, and it's being squeezed into here. So there's a lot of symmetry right now. So we don't really have any confirmation candles that's ending the downtrend right now. On the MACD here, it looks like it wants to come down like that and maybe curve upwards. On the 2-hour chart, same thing as well. So what I'm seeing the most of right now is indecision in the market. On every single time frame, what I'm seeing is basically this. But if I actually compare it, right, to, for example, here, it's squeezing in. Now, let me show you guys a few lessons about triangles, okay? So this right here is a falling wedge, okay? That's a falling wedge, and a falling wedge will do something like this, where it'll come down, it'll touch 1 point, 2 point, 3 point, 4 point, 5 point, and then it breaks upwards, okay? That's a falling wedge, and falling wedges are bullish. Now, I'll show you guys what a rising wedge is. So that's a rising wedge right here. And now rising wedges are bearish, okay? They're bearish, and they look like this: 1 point, 2 point, 3 point, 4 point, and 5 point, and then it breaks downwards. Now, there's other types of triangles as well. For example, there's this one here, which I'm sure we've all seen, okay? Right here. This is a good triangle to be trading, and it usually just makes 1 point, 2, 3, 4, and basically a 5th point. Oh, sorry, I'm drawing it wrong. It goes up and touches 1 point, and then it comes down and the count is like this. 1, 2, 3, 4, and then 5, and then it breaks upwards. Now then there's the opposite as well, right? That one is called an ascending triangle. This one is called a descending triangle, okay? And then it basically, let's say you're coming down here like this, and you start from this point. This is 1, 2, 3, 4, and then 5, and then it breaks downwards. Now the hardest ones to play are basically these ones, and these are called a symmetric triangle, where it's pretty even, right? It's not falling, it's not rising, it's not a descending triangle, it's not an ascending triangle, right? So these ones will usually, you know, make a point like this somehow, and then it could break out either way. So what people look for is they look for, if it breaks upwards, then they'll go into a long position, right? They'll go into a long position like this, and they'll set their stop loss slightly below here. Do you guys know what this tool is? This is a risk to reward tool, okay? I'm just gonna go over it really quickly for you guys. I've gone over it many times in my other videos, but I like to go over it briefly in almost every video. Now, the way they calculate this, notice it says 1 to 1, okay? 1 to 1. If I flip the coin, okay guys, and heads or tails, and you flip the coin with a friend, okay, and you're flipping just a loonie, for example, right? And now let's say your friend says if you win, right, if you make the right call, if you win, he'll give you $1, okay, $1. But if you lose, then you owe him $1, right? So the ratio is $1 to $1. So your risk to reward is equal to 1 to 1, okay? That's the simplest way to understand it. So if you flip the coin for heads or tails, and if you won, you would win $1. If you lost, you have to give your friend $1, right? So you're risking $1 to gain $1, which equals a risk to reward ratio of 1 to 1, okay? Now, for example, if this was changed to if you lose, right? You lose 50 cents. Now, this changes to 0.50 to 1, right? And if you take 1 to 0.5, that actually becomes a risk to reward ratio of 2.0. So that's how they calculate this. So in this particular case, right? In this particular case, this would be a risk to reward ratio of about 2.0 right there, okay? So now what you want is as little risk as possible, okay? You want to be risking as little as possible so you can gain as much as possible. So obviously a really good one would be, say if you lost only a quarter, right? And that would be a ratio of 4 to 1 because you have a chance to win $1, but you only have a chance to lose a quarter. Well, think about that, guys. If you played heads or tails often, right? Just played heads or tails and there's a 50-50 chance every time. If you played 4 games in a row, right? The chances are you'll win at least 2 of them, right? And if you lost 2 of them, well, if you win 2 games, you're up $2 total, but you lost 50 cents, right? That means that you're overall up $1.50, right? So we think of trading as a game of probability, where you always want to have the highest risk to reward ratio, because over time, you'll end up being profitable. So I wanted to go over that really quickly with you guys. Okay, so I drew in some lines here. Let's just delete this here, and I'll let you do it again quickly. Now, remember how I was talking about how there's a falling wedge like this? Okay, the way we look at falling wedges is like this. We'll draw it in just like that, okay? And there's no debating that this is the resistance line. Would you guys agree? We can discount these parts because those are like bull traps. Sorry, it's about 3:30 in the morning right now, and I wanted to get a video out. I actually woke up in the middle of the night just to get a video out because I think there's going to be a big play coming soon, and a lot of people are wondering what's going on in the market. So do you guys notice something very similar about this as well, right? This point is touching here, okay? It's starting to squeeze right down into here. Now the way we play this is like this. We take our risk to reward long position, right? we make a stop loss slightly lower than it. Now you guys might be wondering why I'm putting it right here, okay? Notice how this is the green area from here to here. So we use this as a guideline. And this is a risk to reward ratio of about 4.9, which is fantastic right here. We use this base range right here as a target, okay? The size of the wedge. If that's the size of the wedge right there, we can assume that when it gets to near the bottom, it will actually break out and go upwards, which is a phenomenal thing, okay? So we're just basically, what I'm doing is I'm waiting right now to get some confirmation. It's just going to keep hovering down, hovering down, hovering down like this, okay? So what I'm going to do is count my 5-wave pattern like this right now, okay? I'm going to count it like this. Okay, you guys ready to count with me? We'll start from here. This will be 1, okay? We'll call this one 2 actually. We'll call this one 3, and then we'll call this one 4, then call this, oh sorry, I drew that wrong, my bad. Okay, this is the way where we're going to draw it properly. We'll just start from somewhere up here, just as an example. Okay, call this one 1, call this 2, we'll call this one 3 here, 4, and 5. Notice that from 1 to 2 right here is very symmetrical, okay? And then 3 to 4, it's actually very symmetrical too in terms of angle, right? If we get our angle tool in here, we'll notice it's very similar. Like this one here, the angle is 44, we'll say. This one is probably very similar as well. This one's like 48, okay? So we can also assume symmetry of this one coming down here, 42, and this one is what, you know, it's probably going to fall down at around the same rate again. We'll say 42, and I'll just draw it a little bit better there. So when it gets to this point pretty much right here, and it breaks out, what I'm going to do is go into a long position and use the same target as right here, okay? And then we actually have a really nice risk to reward ratio. So right now I'm expecting it. Set aside Elliot Wave and everything else for now. We can also approach it from a very basic perspective, right? Where this zone right here will actually be a great buy zone. And let me indicate the price for you guys. And we're going to go over why this is a very nice price zone as well. So the price zone is between about $5.90 and $5 or $6.10 about. Of course, it could be a little bit higher, right? It could be, I might be accumulating from even $6.15, we'll say, just to give myself a little bit more room. So just an example, when people accumulate, what they do is they'll buy, for example, 1,000 coins. We'll just say a smaller number, like 100 coins right here, right? And then if it goes lower, they'll buy 100 coins here, and then they'll buy 100 coins here, and they'll buy 100 coins here, okay? And I'm going to give you guys a really, really, really good example, guys, of how I fucked up and how I recovered, okay? So I thought there was going to be a bounce right here, a really high bounce actually, around $8, we'll say, okay? Right here, I bought it, and I thought it would actually go up a little bit more, okay? So we'll say I bought it at $8 there, and let's say I bought 100, which I bought more than that, but we're just using it as an example, okay? 100 coins here at $8. Makes sense, right? But because I realized, oh crap, that's not the right count right there, I completely screwed up there. And I went into a long position because I expected a bigger bounce, right, from $8. So now it bounced more down here. And when it actually came down to here, it reached a really low RSI point. I figured, hey, that's got to be the bottom right there. So this was around we'll just say it was 750, okay, just as a round number. We'll just pretend it was 750, okay? It's really 755. So what I did was I actually bought more coins than this, but we're just using this as a round number. And I don't want you guys to know what kind of position sizes I play. So I bought 300 coin at 750, right? So now total, I have 400 coins, right? But if we take the average of those coins, right? 100 coins at $8 and 400 coins at 750, the average is equal to 400 coins at $7.62.5, right? That's what it ended up working out to, okay? Does that make sense, guys? I'm gonna go over it again. So I bought 100 coins at $8, we'll say, and then I didn't know that it wasn't going to bounce higher. It actually fell down really low. So I added 300 more to my position size, okay? 300 more to my position size, which totaled 4 coins. So now I have 100 coins at $8, not 800, at $8, and I have 400 coins at $7.50. But if I take the average of 400 of those coins, right, it actually equals to $7.60 or $7.62.5 there, okay? So of course it bounced up right there, okay? It bounced up, and my average for the price ended up being right around here, we'll say, right there, right here. 7.6, that line, but because it bounced up really high to over here, I actually got a chance to not only break even, but I got a chance to profit, okay? So that's why it's very important to accumulate slowly and not go in all big at once. And it goes to the same concept of me saying maybe buy a few here, buy a few when it gets lower, buy a few when it gets even lower, right? And then buy a few when it even gets lower. So you average out the base price of all of your coins total. Now, that's why that, I guess newer traders will buy one position. They'll buy one position and that's it, right? But what professional traders will do is they'll accumulate very slowly, right, to average out their price, okay? And now let's say it doesn't even get lower and it ends up shooting out of it. That's okay, guys. It's the end of the wedge. If it breaks this resistance right here, just buy into strength. No problem at all. But the point is you're always trying to buy on the dips. And if you're buying on the dips, trust me guys, it is a really good thing. Do not ever buy, even if you're playing with $1,000, okay? You know, don't ever buy like all of your coins in $1,000 worth in one spot. Always spend maybe $200 here, 200 here, 200 here when it keeps getting lower, and be confident, right? Be confident, guys. If you firmly believe it's going to go up, you know, keep that confidence and stay calm always. Don't ever let your emotions override it, and take my advice when I say to accumulate very slowly, okay? Unless you know there's a lot of strength and it's about to break out, and then what you want to do is absolutely buy into strength, because the target could all the way be up to $6. I'm going to put a line there so you guys can see. $6.42 basically is the next target. I mean, this wedge can only get so small, right guys, before it breaks out. It can only get so small, okay? Even if it came down to over here way at the bottom, it could still reach $6.23, right? And this could be maybe moved to the bottom here a little bit. But the point is, the target is about a 5.63% gain, and the risk to reward ratio is actually 5. Now let's put this into perspective for you guys, okay? We're going to do the flipping a coin thing again. What that means is flipping a coin heads or tails. If you win, you get $1. If you lose, you give your friend there only 20 cents, okay? Imagine playing heads or tails 5 times in a row, okay? So 5 games in a row, right? If you win, even say you win 3 games or you win 2 games and you lose 3 games, right? So your wins will actually total how many, guys, if you're winning $2 at a time? Okay, if you guys said $2, you got it right. Okay, now if you lost, right, 3 games and you're losing 20 cents per game, how much are you losing? Okay, if you guys said 60 cents, you're right. Now over 5 games, what is your total profit? Your total profit is $2 minus 60 is equal to $1.40, okay? That's how we think of risk to reward. Now let me ask you guys a serious question. If you had a 50-50 chance every single time to win, right? 50% chance to lose, 50% chance to win, and this same mathematical ratio of probability stayed the same, would you guys be profitable over time? Not in that one trade, but over time. The answer is absolutely you would, right? So let's say that the percentage of your gain was always 6%. Okay, meaning you have a chance to win $1 every time and a chance to lose 20 cents every time. Well, if you played even 10 games, okay, like let's say you guys played 10 games in a row, 10 games in a row, and even if your risk to reward was 50 cents, okay, you win $1 for every heads or tails, and you lose 50 cents for every heads or tails. Well, over 5 games, okay, how much would you win? You win $5, right? And then if you lose 5 games, what would you lose total? You'd lose 250. So now we take $5 over minus 250 over 10 games total. You're still profiting, or equals minus 250 is equal to $2.50 profit. Okay, guys? Wouldn't that be fantastic if it was like that every time? So what I'm trying to teach you guys, which I'm going to be making a video series, guys, of what goes on in my mind. And trust me, probability trading and risk management is going to be a very, very detailed topic. And it's going to be explained in such an easy way for everybody to understand, like the way I'm explaining it right now. So if you guys think of how easy it is to play basically this game right here of probability in the stock market, you guys would make money over time. I keep saying to people that risk management is the most important thing to understand, okay? We don't need to be an expert at reading trend lines. We don't need to be an expert at reading charts. But what we need to be an expert at is managing our money and managing our risk, okay? But in this particular case, we are taking our base range right here, okay? Even if we were not as generous and we made it, smaller there, that's still a risk to reward ratio of 3.6, right? Which is amazing. This risk to reward ratio was 2 to 1, right? Which is amazing, 2 to 1. You have a chance to win twice as much as you lose. Here, you have a chance to win 3.6 times more than you have a chance to lose. So for every OmiseGo coin, you're risking basically 7 cents only per OmiseGo coin, but you have a chance to gain a quarter per OmiseGo coin. Does that make sense, guys? Watch this video a few times or just keep rewinding it if it doesn't. Alrighty, so based on how this wedge is looking right now, gentlemen and ladies, what I think is really going on is this, okay? I'm going to show you guys what I think is going on right here. Let's go to a better time frame. I think that this is basically 1, 2, 3, 4, right? And the 5 is right here, guys. A slight bottom right around there, okay? And we were talking about that breakout, and this is where your 5th wave starts, okay? And then if you guys remember from the ETP video, which actually I'm going to show you guys one more time, okay? On ETP right here, right? We made the 5 waves, 1, 2, 3, right? 4, then 5. And then we finally got a chance to test the resistance with an A, B, C correction. And then it started making a 1, 2, 3, 4, 5 again. And now, ETP, that's another hot topic right now. I probably want to get in there and short it. While on another note, I want to teach you guys something here, okay? This is called an inverted hammer, okay? Inverted hammer, or it could be called a shooting star. Inverted hammer or shooting star, okay? This is the market psychology behind it, okay? Market psychology is that the bulls attempt to break the resistance line, but they fail pretty badly, shown by the long wick, okay? So it is shown by the long wick right here. The bulls tried to shoot it up past the resistance, but they got rejected very, very hard, and the bears pushed it all the way back down here. So if you guys are trading ETP right now, this is actually a phenomenal trade for you to take because the candle is a 2-hour candle and we're already 15 minutes in it. Actually, I'm going to pause this video and go short it. Yeah, I'm definitely going to pause it. I'll be right back. I want to go short this coin because it's a beautiful one to look at. Okay, I'm back, guys. I just shorted 300 coins there. It's not a lot, it's only $1,000, but what we want to do is always spread out our money, right? So $1,000 may not seem like much, but hey, if it falls down 5% or so, I'm making $50 on a very small trade. And we like to spread out our money to different coins where there is high probability, right? So instead of only going into one massive position every time, we try to allocate small amounts of money to different coins where we think has the highest risk or the best risk to reward ratio possible. And I'm going to go over it in so much detail because I don't think that there's a lot of content out there on the internet that will explain it in the way that I do, okay? You know, my father was actually a teacher, and it's kind of in my blood to teach, if you guys know what I mean. And I really do think that over time that we can all be very successful if we learn the very basics of training. So my ultimate goal is to help people down the road, and I really sincerely want to help you guys, okay? I I like to, if you guys should try this too. Like I love to watch the keynote speakers for graduations, right? I forgot what they're called, but they give this really big speech and they get like a guest speaker, and it's like a motivation for the graduating class, right? And what they always usually say is that, you know, once you have done your part in life, teach, okay? I think I've done my part in life already. I've done pretty well for myself in terms of trading. I'm pretty happy and secure financially, we'll say that. And now I just want to show people what I know as well. And I think it is so rare in life to find good material in cryptocurrency, because everyone is really greedy, right? This is a greedy industry and they don't want to share with you guys what they know because it takes away from their profit, because we're all competitors at the end of the day. But I don't believe in that at all. I believe that sharing is power, right? And we should always bestow to other people what we know. And I kid you not, like I look at all the videos out on the internet, and if there's some good material, it's because they're trying to con you guys into buying some sort of package of theirs, right? They want to sell you some training package, they want to sell you some chat room to get signals. But trust me guys, you don't want to go in there and learn and get buy sell signals, okay? It doesn't make you become a better trader, right? It's kind of like the saying, you teach a man to fish, right? And he can fish, he can feed himself for a lifetime, right? Do you guys know what I mean? So if you show people how to do things, they become more self-sufficient and they become more confident, right? I mean, if you guys buy and sell signals, you're just going to get yourself in trouble over time because it doesn't teach you the right way to do things. So anyways, enough ranting about that. So what I think is it's going to make another fifth point to somewhere down here, right? It could be in a random area, just somewhere down there, okay? I think it will be between, you know, say 590-ish and 610, like I mentioned. And then once it gets to this point here, like in ETP, it finally made its way up to try to test this resistance line, right? What I think will happen for sure, actually, not I think, is going to make an A, it's going to make a B, and it might make a C like that. Now, never mind you, this A might be like that, okay? Might be just like that. But what the main thing to understand is that this is a key resistance area. And this is a resistance area basically from, you know, right around there, from many points, guys, okay? Many points. And I'm going to show you guys what I mean by the points. We have right here is a key area. We have here is a key area. Here is a key area. Here is a key area. Here is a key area as well, right? This one, it hovered over it just a little bit, so definitely. So we have to ask ourselves, if that was a key support, right, will it also be a key resistance? Absolutely, because what was formerly a resistance ends up becoming a support, and what was formerly a support ends up becoming a resistance, right? So now what's the next resistance that we can see here? Next major resistance, right? Sure, we can see this one here. We can kind of see this area, but it doesn't count because this one overrides it, okay? So the next logical area for it to test, if it broke through, would be somewhere in this particular zone right here between $7.10 and $7.44, okay? So it's gonna, if it breaks through here, okay guys, every time we go up, what ends up happening is it tries to break out into the next massive wave. And if we look on the daily chart, we can see it sort of to happen already. It's just waiting for a breakout, guys. Trust me. Trust me when I say it is just waiting for a breakout. We already hit a very low for the day, right? And we are also being squeezed into here, right? So what this ABC correction does, guys, now don't get me wrong, okay? You guys have to really understand this, that this is no matter what coming into this green area based on the theory of falling wedges. Falling wedges do not lie, okay guys? You can call it for the jaws of wealth, okay? think of it as this, okay? You could think of it like as the jaws of wealth, basically, okay? The jaws of wealth never ever lies, and it's such a good risk to reward ratio that you guys should definitely consider taking that trade. Now, next logical thing to assume is, of course, it has to try to break this point, right? But because it's an ABC correction, most likely it will. So right here, it's going to try to break it. 0.4 right there is the next reasonable area, right? It's the next reasonable area to assume. If it breaks that area right around here, then the next area it will try to break is this resistance right here, okay? So when it gets down here, it would be almost silly for you guys to not take this trade. And I'm not a financial advisor in any way. Don't get me wrong at all, okay? I'm not a financial advisor, but I'm going to take this trade because of my rationality behind everything that I'm saying, which is, okay guys, which is basically it'll make an ABC up here. Even if I'm really wrong, guys, even if I'm really wrong, right? And for example, you know, for example, this was 5 right down over here, right? And this was a B, C correction already, okay? Even if I'm really wrong, okay? Well, and let's say this was actually wave 1 right here, okay? Wave 1, just to down over here somewhere, and then it broke out, okay? Well, it's still a really good trade to take no matter what. Like, don't get me wrong again, I'm not a financial advisor, okay guys? I'm just explaining to you the logic behind it. It's still a decent trade to take if this was the right way to draw it instead, and this ends up becoming the double bottom like I mentioned. And the reason why it's a good trade to take is because of this falling wedge right in here, okay? So regardless of which way I'm right, which I will draw again for you guys, it's still got a really nice risk to reward ratio, we'll say of 3, right? No matter what. So even if this one is right, where this is 4 and then 5 was here and then it did A, B, C already and it was coming down to wave 1 still, you still want to catch this wave right here because it's still immensely high, the risk to reward ratio of 3.5 about, okay? And then even if it went down there again, you guys can gauge it by the RSI, okay? You can gauge it by the RSI and then you can close your position and looking at the MACD as well and candle formations, etc. So you're still looking to get a 5 to 6% gain, which is massive, right? And if you do confirm that it's a downtrend, then well, you'd be taking another position from shorting it from here to here, okay? But what I really do believe, if it counts for anything, is I'm just looking at the daily chart. I just have a hard time thinking it's going to come down a lot more, right? And if it does, you know, it might come down to about the 10th or 11th. And if we look on my chart that I'm drawing here, right, you know, it comes down to about the 10th to the 12th right here. So my logic is this, gentlemen, that it needs to test another double bottom, okay? It needs to test another bottom regardless of which way I drew it right. It needs to test another bottom to see if it can go lower. And if it cannot go lower, and it made a test of the double bottom, that it's now gonna, the bears are now gonna test it up there, okay? But another key note for us to understand is this will break out from here no matter what because of that jaws of wealth that I'm talking about. And no matter what, it will make another test. It could possibly make another test to all the way up there again, okay? And if it does hit this resistance line and it fails miserably, then we're 100% gonna end up getting down to over here. Okay, if it does break past it, we're going to try to test this next resistance right here. Right here, the main one. This is the main guy that we want to look for. Okay, I'm going to draw it in pink. This is the main line. It's huge because it crosses all of these ones. And that one there, guys, is the main test. So once again, if I was wrong and this is not wave 1 coming down, because I could very well be wrong, that this is ABC up here. It's hard to guess sometimes and draw it accurately because we may not have that much data, okay? So maybe A will test it like that. If it does break it, it might test this major resistance line. If not, then maybe we'll get like a test up there and we'll get a double top here. If not, that we might just, you know, fall short of this one, fall down to B, shoot up to C. So what I'm saying is this could be 0.5 right here, right? That could be 0.5 just like that. And then what happens next is ETP failed, as you guys saw when I drew it. So I'm expecting if it fails, so what we try to do as a trader, guys, is look at everything from many different perspectives, okay? So we try to look at it from many different perspectives so we can be prepared for every single possible scenario, okay? Now, this might look like a mess to a lot of people, but to me, guys, it really does just end up looking like a double top, right? Or sorry, a double bottom like that, okay? And I came back to my chart, as you guys saw at the beginning of the video, and it was pretty accurate, I'd say. So I think that this is 1, 2, 3, 4, and 5 probably, right? And then we're going to go A, B, C, and then we're going to make a 1, 2, 3, 4, 5, which will officially complete, okay? Maybe not that far, but you know, it might even be a better time frame, like something really small like that, right? Around the 14th or so. This will officially complete the WXY correction, right? We'll just assume it goes like that, and then we could get a pretty large target like that. Now, long term, what are we expecting, guys? But first of all, let's look at our Fibonacci, okay? Let's look at our Fibonacci retracement tool right here. And we notice that it's actually almost at the 0.618 level, okay? Almost at the 618 level right now already. It actually almost touched it again, okay? So the 618 is a very strong support level. And notice that it actually didn't quite touch it there. It almost did, right? So let me show you guys what the 618 level means for the people that don't understand it, okay? So if here to here was 100%, right, was 1, if it fell down to 0.5, that means that it fell down 50%, okay? If it fell down to, say, 7.5, what would that mean, guys? It would mean 75%, right? What about this one, for example? This is 382. So if it went from here to up there and it fell down to 382, that means that it fell down 38.2%. If it fell to 236, that means it fell down 23.6%. If it fell down to 786, it means it fell down 78.6%, right? So this number right here, 61.8, is the magical number. It's the magical number that people want it to hit. And once it hits that number, people will place a lot of buy orders and the price usually rebounds from it very strongly. So right now, all that we can do is wait for more confirmation until we get a decision on what the market wants to do, okay? So I am expecting a double bottom, right? I'm going to expect it to test this resistance line, and I think that it will actually fail, guys. I think that it will actually miserably fail, and then once it fails, it's going to correct itself down to another double bottom, officially ending the C. Now, let's say that that was indeed the bottom, okay? We're going to do some long-term targets. We choose, remember I talked about the trend-based Fibonacci extension. We take the first point where the lowest one is, the second point where the highest point is, and the lowest point to where the third point is, okay? And we always target, like I mentioned, a fib extension ratio of 1:1. Now, if this ends up holding and creates a double bottom, right? And let's say something really good came out, and like the wallet came out, the wallet SDK for the developers came out, well, long-term target, guys, we're still looking at about $18.88, and we have no reason to assume otherwise until there's bad news, okay? If there's bad news, then the price will tank more. But if the price does tank more, excuse me, I burped there. If it does tank more, you know, then it came down to 78.6%. Well, then we'd still be looking at a good $16 in the next few months that are coming up. And don't forget, guys, 2018 is the year for OmiseGo, not this year, okay? This year is the year for lots of development still. But next year is when their DEX, their decentralized exchange, will come out. And there's going to be a lot more things going on with OmiseGo. That's why I'm focusing a lot of my time on evaluating it, okay, guys? I think that there's a lot of potential for OmiseGo. And I think that 2018 is going to be a very hot year. So I'm going to leave you guys with this thought right now, all right? You guys know exactly where some targets are between 590 and 610, right? It's a pretty good buy zone if that wedge there just ends up coming down more. See the falling wedge here again? Whether this is 4 and that's 5 or not is kind of irrelevant right now, okay? Like this could be 5 right down over here already, okay? This could be ABC already. That could be ABC already as well. It doesn't really matter. This could be a small 1, 2, 3, 4, 5 coming down already, okay? We'll just call it something like that right there. But either way, guys, this point is critical, okay? It's a critical point right now, and whether I drew it right the first way or the second way, it's gonna, after this breakout, it'll most likely try to shoot for this resistance line that we see around $6.83. So am I gonna take the trade? Yes, I'm absolutely gonna take the trade. I'm no financial advisor though, okay guys? I'm just letting you guys know my opinion and what I'm gonna do. So I apologize if the video was extremely long, and I promise that I'll try to get more of these videos out for you, okay? I'm sorry that I couldn't get my dog involved in this video. She couldn't bark for you guys today because it's 4 in the morning and she's still sleeping right now. Though if you guys enjoyed my video, you know, follow me on YouTube, follow me on Twitter and stuff as well, guys, because I tend to do a lot of updates on the coins that I'm very interested in. And if you especially like this video, you know, donate something to my dog. I actually have an exchange wallet for her down there that you'll see in below, and I keep it for an emergency fund for if she ever needs to go to the vet or get anything special done by the doctors, you know. So if you guys love this video, send me a small little tip. You guys know I'll never ask you for anything in terms of video content, right? For you guys to pay for anything. And there's people that have said that what I provide in terms of education and in tweets, you know, like people pay like $2,000 for those kind of packages. So know that I'm never going to ask you guys for money or anything at all in that particular way, okay? But though, if you guys appreciate my time, just send me a small tip, buy me a cup of coffee or something. And other than that, have yourself a wonderful day, guys. I really appreciate you guys taking the time to watch this video and all the love and support. Have yourselves a great day at 4 in the morning, wherever you are in the world.